Hey everybody, I'm Brad with Wooten CPA. My goal is to bring peace to your finance and tax responsibilities. I do that through these videos. What I'm going to talk about today are the recovery rebates, the stimulus payments. Now, I have put out one or two videos on this already. I took those down to consolidate and put the information in here. It's April 3rd, 2020. And this is my understanding right now. I did put this confidence meter over here because there are some things, other videos I'm going to put out related to this CARES Act or the things that are coming out right now because of the new law that are here to help as stimulus. And so on this particular topic, you can see confidence is very close to 10. This is decently straightforward. There are a few pieces of it that aren't very clear right now, but I will give you that information as well. So these are the recovery rebates, the stimulus payments. The law refers to them as recovery rebates. This is the $1,200 for individuals that you've heard about, $2,400 for couples, $500 per child. They're going to be direct deposited or mailed out within the next 3 to 6 weeks probably, and so you can expect to get that. Now there's a few pieces of elements here that I want to clarify and help you understand this so that you can move forward with confidence on what's going to happen. Now, first I want to jump over to what it is. Again, it's a $1,200 payment per adult, $500 per dependent child under 17 or other qualifying dependent. And so if you are single, there are phase outs to where if you make more money than the limits, you don't get the payment. So what's going to happen is if you make less than $75,000 as a single, less than $150,000 of your AGI, adjusted gross income, you can look at that on your tax return. It's labeled as adjusted gross income. If you made less than this, you'll get the full amount, $1,200 for single, $2,400 for married couple filing joint, add $500 per kid under 17 on your tax return, and that's the amount you will get. If you make more than $99,000 or $198,000, you will get none. If you make in between 75 to 99 and 150 to 198, it will slowly phase out. This money will go down a little bit each, for each dollar that you make in between this until it phases out completely. So that's how the stimulus payment is going to work. What are these recovery rebates? This is important as well. This is a 2020 rebate. It's a tax credit for 2020. Now you are getting it now in advance. So what does that mean? Well, right now we're sitting in 2020. It's April of 2020, and we are filing the 2019 tax return right now, or you have already filed it, or you're working on it and you have yet to file it. So what the IRS is going to do to find your adjusted gross income is they're going to look at your 2019 tax return, and they're going to base your payment on the 2019 tax return for what you get right now. Pay attention, that's very important. What you get right now is going to be based on 2019. If 2019 has not been filed, there isn't one, they're going to look at your 2018 tax return. If you haven't filed 2019, they're going to look at 2018 for your adjusted gross income to see if you qualify or phase out to receive this payment. There's a planning tip there. We'll get to that as well. You're going to get that payment now. Now again, this is a 2020 tax credit. So what does that mean? That means that this tax credit will actually be calculated and reconciled in 2021 when you file your 2020 tax return. So next year, when you file your 2020 tax return, there's going to be a spot to calculate this credit. I'm going to get to that. Stay tuned. So the planning tip right here, if you have yet to file 2019, if your 2018 AGI is under this limit and your 2019 will be above this limit, that means if you file 2019, you won't get a payment. But if you hold back and don't file 2019, they're going to look at your 2018 return where you had less income and they will send you a payment. Will you have to pay that back? I'll get to that in a second because that's very important. If 2018 you had income above these limits, but 2019 it's going to drop below them, you should file as soon as possible because you want them to look at your 2019 return where your income was lower than 18 so that you get the payment and can have that to use now. If you don't file 2019 and they look at 18 and say you phased out, but you would have qualified 19, will you still get the payment or do you completely lose out? I'll get to that as well. So let's jump over and look at that actually right now. So like I mentioned, this is a 2020 tax credit. They just happen to be giving it to you right now, and they're basing whether or not you receive it right now on 2019 or 2018 tax returns. So in 2021, you're going to file your 2020, this is in 2001, you're going to file the 2020 tax return. What's going to happen is your 2020 tax return is going to be completely normal. It's going to be like every other tax return. You're going to get there, but there's going to be this extra refundable tax credit that's going to be calculated. Now what's going to happen is, let's say you qualify in 2020, not based on 2018 AGI, not based on 2019 AGI. That's just what they're basing the payments right now on. The credit itself is based on your 2020 AGI, which no one knows yet because 2020 hasn't happened. And so the tax credit will be calculated based on your 2020 tax return when you file it next year. So let's say at that time, based on 2020, you qualify for $1,200. And let's say right now, you also qualified for the full $1,200 and they sent you that payment. So you're going to calculate the credit as $1,200. You're going to say, I've already received $1,200. It's going to wash out to zero, has no effect on anything else on your tax return. Now let's say they looked at your 2019 tax return and they said, hey, based on 2019 AGI, you only qualify for $100. You're in between the phase out range. You're only going to get $100. What's going to happen? You're going to file your 2020 tax return, and let's say your income goes down in 2020, and based on 2020, which is what the tax credit's actually going to eventually be based on, you qualify for a full $1,200. Well, you're going to say, I qualify for a full $1,200. I only received $100 because they based the estimate on my 2019 tax return, and that income was higher than it was in 2020, and so I only got $100. I'm still due $1,000. I believe, based on the reading of the tax code and some other resources that I've continued to watch and read with people who agree with this seems to be the general consensus. Again, confidence meter moving down a little bit more towards 8 or 7 here. I believe you're going to get the additional recovery rebate at that time if you qualify for it based on 2020, but didn't get the full amount now because 2019 or 18 was higher AGI when they sent you the estimate for what you deserve. Let's not even get into that, but you know what I mean, based on what you qualify for. Now, let's say we hold off. Let's say you're in that category where you would qualify under 18, you would not qualify under 19 because your income went up and we held off and they sent you a payment. They said, hey, based on 18, we think that you qualify for this rebate, so we're going to send you a full $1,200 payment. Then we filed 19. Nothing happens when you file 19, as far as I understand. You know, you will file 19. And then when we get to 2020 and we're filing 2020, let's say your AGI is still above the limit. Well, on your 2020 tax return, you're going to calculate your qualified rebate as 0 because you make too much money. You phase out. You don't qualify. You're going to say, I've already received $1,200. And if you remember, they're going to reduce the amount that you qualify for by what you've already received, not the amount you qualify for. The amount you qualify for is here. They're going to reduce the amount that you're going to get in 2021 based on what you already received ahead of time as an estimate now. But the law says you cannot reduce the credit below 0. So again, 0 minus 1,200 is negative 1,200, and that would mean you have to pay it back. But the law says you will not reduce this credit below 0. So 0 minus 1,200, not below 0, is 0. You don't have to pay it back. That's my understanding. Again, confidence there, 7 to 8. I feel pretty confident that's the way the law is written. We have to wait until IRS puts out their understanding, interpretation, and the instructions to the form that's going to calculate this credit and all of that. But that's my understanding of it, is you won't have to pay it back. So if 2019 is going to disqualify you and 2020 is going to disqualify you, but you haven't filed 19 yet, then hold off if 18 lets you get it, because that's what they're going to look to. Now, if 19 doesn't disqualify you and you get it, and then 2020 does, no need to worry. I don't think you're going to have to pay that back. Now, let's say you don't file a tax return at all. Maybe Social Security is your only income and therefore you don't have to file a tax return. Or maybe you're turning 18 or 19, you haven't had a job before, you didn't file in the past, and 2020 is going to be the first year you file. For those of you where 2020 is going to be the first year you file, I think you're going to be in a situation that's not actually up here because you didn't file. They didn't have any information to look back on, so they didn't send you a payment. But in 2020, you'll calculate that your credit's $1,200 because it is a 2020 tax credit. It's not a 2019 or 18 tax credit. You'll calculate it next year in your 2020 tax return, and you'll get it at that point. Now, let's say you fall in that other category of Social Security is your only income, or you didn't need to file for other reasons, but you had earned income or income in the past. The IRS said a couple of days ago that you had to file a simple tax return. That's not in the law anywhere. It says that if there is no 18 or 19 tax return, that they should look to the SSA, Social Security Administration, for information on file there and send payments based on that. The IRS said there's going to be this simple tax return. 24 hours later, they took that down and said there will not be a simple tax return. So again, confidence meter, based on the law, this would be a 9 or a 10 because the law says what they should do. Now, why the IRS came out and said there's going to be this simple tax return, I have no clue, but they did take it back down 24 hours later. So if you're in that boat, I don't think you have to do anything. They're supposed to look to Social Security Administration for information. They have your information there, and however you receive your Social Security benefits from them, that's how they're going to give it to you. So if you get a check, they're going to mail you a check. If you get direct deposit, they're going to direct deposit it. But you should not have to file anything in that instance. So that pretty much covers most of this. There is going to be a web portal. There's going to be a website through irs.gov, I believe, where if you received paper refund checks, but you want to get the stimulus check now as a direct deposit, you can give them your bank account information and they'll do it. They haven't set that up. Last I checked, again, it's April 3rd, roughly 10 a.m. They haven't set that up yet. So this is the information we have now, April 3rd. Confidence meter pretty high. I don't think this is going to change significantly. If you are a little bit confused about how this works, because again, there's a lot of stuff here. They're looking at 2018 or 2019 right now, which is 2020, but it's actually a 2020 tax credit that will be calculated on your return in 2021 when you're filing the 2020 tax return. A lot of years, a lot of numbers. Go back. I talked a little fast, but go back, rewatch that, and if you have any questions, reach out to me. I will help explain it to you. But again, it is an advance of an estimate of what you will qualify for this tax credit in 2020. I don't think you have to pay it back. I think you will get the additional if the estimate is off. If the estimate's off, you won't have to pay it back. I just said that, but that's what we've got right now. Again, watch it again if you need to. And reach out to me if you really are confused and need help on that. But that's hopefully clear. It's about as clear as I think I can get it right now without starting to ramble and saying the same thing over and over again. Thanks for watching.